Hello traders and welcome back in a new week ahead video. This is Mohanad Yakout, Senior Market Analyst at Scope Markets, and today we will be looking at the high risk events that we will be expecting throughout the week ahead. And of course, we will be discussing technical analysis on the key financial instruments. The week began with some big moves we have seen on the oil prices, gold prices, as well as the dollar index because of the de-escalation that we have seen during the weekend. Will this state of de-escalation continue? That should boost the risk sentiment and markets furthermore across or throughout the week, or we can see again Donald Trump just reversing action and announcing some or a fresh wave of military action or escalation in the Middle East. We will be discussing this as much as we could, and of course we will also be discussing the key supply and demand levels that you should definitely have on your charts during this week. So sit tight till the end of the video so you get all of the info that you need to get prepared for the week ahead. Starting off with the week ahead here, we do have a couple of things that we need to look at. First and foremost comes the FOMC meeting. We will definitely discuss this in a bit. We also have the Bank of Japan meeting coming on during this week as well. And we also have 4 of the Magnificent 7 companies in the US stock market announcing their results throughout the week. We will definitely also have a look on this. First and foremost, what's been happening across the weekend is basically, as you can see, those are the top headlines I've got for you. The US pauses Iran strikes for the second straight night as talks move in the positive direction. Basically, Donald Trump says that we will be allowing some diplomatic efforts again to start and destabilize the region. However, some reports say that basically this is because the US Army is running out of ammo. We will never know the truth. However, the end result is markets are seeing a little bit of stabilization in the Middle East at the moment, a little bit of de-escalation. This is why we have seen the US oil open the week sharply lower. We are talking around 6% lower. And of course, in case this current environment of risk sentiment continues, we can expect oil prices to move even lower. US and Iran posed the attacks after days of escalation as Trump giving talks some space. Will those talks basically lead to anything fruitful, or we can see again fresh round of attacks? This is something that only days will show us. However, in the current environment of risk sentiment kicking on back again in the markets, you should be prepared technically. We will have our supply and demand levels that, given the current market conditions, can help you trade on the key financial assets. However, if things change one more time, and of course we can expect this to happen, especially from this side of Donald Trump, you will know which levels, basically, if broken, the whole move will just be reversed, and we will mention this in the technical analysis in a minute. The Iran's foreign minister as well, spokesperson, says that there has been progress in talks with Oman on managing shipping in the Strait of Hormuz. Whether any fees will be applied or not, this is something not yet announced to the media. Donald Trump, of course, will not be happy in case any fees are mentioned. Let's move on to the economic agenda for this week. And basically Monday and Tuesday, we don't really have any high-risk events that we will be looking for. On Wednesday comes the FOMC meeting and press conference, the Federal Reserve interest rate decision. And this meeting is a special one, basically, because after, I would say, 2 or 3 years that the Federal Reserve constantly delivered what markets expected, this time around, markets really cannot expect anything. I mean, as per now, as of now, once recording this video, the expectations are for around 60% or 70% of an interest hold. However, 30% goes for an interest rate hike. This division in market expectations I haven't seen in quite maybe two years or something. The question is, did Jerome Powell really deliver to markets what markets needed or wanted through what was priced in the markets, in the money market? This is something that we will No, under the leadership by Kevin Warsh, will Kevin Warsh basically, encourage the board to leave interest rates unchanged, or we can see a surprising interest rate hike? It wouldn't be too surprising, to be honest, because of what we have been seeing in oil prices. I would say probably even if the FOMC wanted to leave, or wanted to hike interest rates after the recent de-escalation across the past 48 hours, maybe this decision is something that will be revised in the couple last hours before the meeting. So markets are not certain of what will happen and how the interest rates will be managed during this meeting. And of course, what comes after the interest rate meeting is the press conference and what would be the narrative by Kevin Warsh and co. Any forward guidance to be given to markets, etc., etc. Moving on to Thursday, we will be having the growth rate for the EU economy. This is for the year over year as well as the quarter over quarter for the second quarter of the year 2026. We have an almost given interest rate decision to be fixed around the same levels by the Bank of England. And we also have the PCE inflation, the personal consumption expenditures, which is basically the most favored for the Federal Reserve. However, when really important data such as inflation comes right after the FOMC interest rate decision, it wouldn't really affect markets so much because we would have around 6 weeks for the next interest rate decision. So during this period, we will have plenty of data for the new decision to be baked in. So what will happen in the PCE in Thursday, which is right after the interest rate decision, I don't really believe that we will be seeing a lot of volatility around it. Moving on to Friday, we do have the Bank of Japan interest rate decision. Again, markets are expecting interest rates to be kept around the same levels of 1%. However, will we see any comments from the Bank of Japan around the Japanese yen depreciation that we are seeing in markets? We are currently talking about the lowest levels in history against the US dollar. This is something to take into consideration, of course, in this meeting. Markets will be looking for any forward guidance on probability of future rate hikes that should definitely boost the Japanese yen across all of the other currencies. This is really important to look at because the unwinding of carry trades on the Japanese yen not only affects the Japanese yen or the Japanese stock market. However, I think we've seen it before in August of the year 2025, last year, when we have seen this unwinding of carry trades basically drag down the US stock market for a couple of days. So this is something that we definitely need to look at during this week. And we also have the inflation rates for July from the EU economy. Expectations are to move higher a little bit to 3%. This is for the headline inflation, which is pretty much expected because of higher oil prices. However, how current oil prices will impact future inflation readings will something to be decided and to be seen by time. Let's move on to technical analysis here and look at our key levels during the week. So when we look at the dollar index here on the 4-hour time frame, we can see that basically this whole uptrend, this upward swing that started in May, it was purely because of the escalation in the Middle East. The dollar index was playing the role of the only safe haven during the escalation in the Middle East. And this is why starting June, we have seen this downward retracement because of the very fragile ceasefire agreement that was in place. However, in middle of July, when you have seen further escalation one more time, getting back to the military action and so on, we have seen again an upsurge in the dollar index. So we are currently trading near really critical demand levels around the 101.20. If the dollar index stays above this level, I really believe that during this week we can be targeting the levels of 101.50, which is the previous week's high, and then we can even aim higher for the 101.90 in case we are back to seeing any escalation in the Middle East. On the other way around, if the current de-escalation tone continues, I really believe that the dollar index will be retracing even lower, breaking below the 101.10 and aiming for the 100.80 or probably even 100.75 during the week. Having a look on the euro versus the dollar, again, pretty much a similar chart on the opposite side, just flipped around. You can see that the euro went higher to retest a really critical level of 1.14. It's a psychological level. It's the lower limit of the price channel. It's a previous support now acting as resistance. And it's a 50% Fibonacci of the latest downward move. So this is a very, very strong resistance. Speaking purely technical, we have tried to break higher, or this is what we call as overshooting the resistance level, which is pretty much given in markets. You can see this stuff happening, especially when you have news backing those movements. However, I really expect that if we today start to see some bearish price action, which is already trying to develop here, I really believe that we will be moving lower to target the levels of 1.1364. The question is whether we will break lower or not. This is something that we will be seeing during the week, again, depending on the risk sentiment. Moving on to trade gold, what's been happening on gold? It's a major sideways range, right? Between the levels of the recent highs around 4,200 and the recent lows around 3,970. And the middle line here is exactly the equilibrium price. And around the equilibrium price, you will most often than not see some volatility here. This is where the buying and the selling pressure is almost equal. It's never exactly equal. And this is why we have seen, gold prices move higher, back lower, back higher. This is the equilibrium, and you can expect all sorts of stuff around here. However, on the medium term, not the medium, I mean for this week, as long as we hold above the $40.53 per ounce, I really believe that we will be aiming higher for the $40 to $100 per ounce. Moving on to trade the US oil and what's been happening here, we definitely broke some, demand levels here. Although we tried to respect those levels during the previous week, however, once markets opened lower, this level was broken. Now we are testing another level of really powerful demand around the $83. It all depends on the escalation versus de-escalation story in the Middle East. However, this is a make or break level during the week. I mean, if we find bullish price action from here, I really believe that we will be filling in this opening gap. However, a clear break below the $82 per barrel with clear intentions of further negotiations or diplomatic efforts or whatever they name it, I really believe that the oil prices will be moving lower to 73. So in the time being, technically, we don't really have a bias. Fundamentally, we don't have a bias. We'll just be following the news and following the price action. However, just keep in mind that the levels of 80 to 70 or 75, it's a really critical make or break level for oil prices during the week. When you look at the S&P here, it's been pretty much doing nothing recently, right? It's been moving in, symmetric and triangle sideways. Despite trying to break below those levels during the previous week, however, again, the risk sentiment and the risk on mood that started the week here pushed the prices higher. I really believe that as for this week, the critical resistance to look at is just around the levels of 7,500 points. Again, this is a really critical make or break levels. I really believe that we will be moving higher, especially if the earnings really support, the growth story in the S&P stocks and the AI story. I really believe that the S&P will be moving higher. However, we will need confirmation of a clear candle close above the 7,500. Only then we will be targeting the next levels around 75, which is a really cool level to be targeting on the S&P during this week. That was all for today's week ahead video. Thank you so much for following this. Make sure that you wait for the week ahead for the next video. We'll see you later.